Hi traders, you are all welcome to another weekly Forex forecast on FX Trading School, which is for 22nd to 26th of February year 2021.
In this week, I'm going to share with you some lists of currency pairs I have on my watch list next coming week should in case of trade breakout opportunity. And then if today's your first time viewing my YouTube channel, do not forget to click on the subscribe button as well. Hit on the notification bell so whenever I release educational content of this kind, you're going to be the first to be notified.
Also, remember, trading is a high risk and a high reward investment. Therefore, it's advisable you know what you are doing and then risk smartly.
Here are the list of currency pairs I am watching out for next coming week.
I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the Australian dollar paired against the USD. I have the British pound sterling paired against the Japanese yen. And then we're going to wrap up things with the euro paired against the Swiss. So let's dive into the weekly Forex forecast right now. The first currency pairs on our watch list is the British pound sterling paired against the USD. In the last weekly Forex forecast which I shared, I discussed about my personal decision on these currency pairs. I said I don't want to buy these currency pairs because there is high tendency for markets to make a slingshot, which you can as well tag as a bullish trap. So I don't want to be trapped right here. So next week, I'm going to have my edge cross on these currency pairs. But if price can offer a pullback to this key level structure of the 1.37938, then I'm going to patiently wait to see if price can carve a strong bullish buy price action bar in order to anticipate for a bullish rally. Alternatively, next week, if the bear should put price downward below this key level support of the 1.37938, then there is high tendency for the bear to put price downward to retest the swing low right here. And then if the bulls should fail to defend this swing low right here, then it signifies the bears are willing to retest the previous key level support which you got at the price level of the 1.34536. And then before price can move to this structure level right here, there must be a high volume in the market, whereby the bulls are to defend this structure level right here. Failure for the bulls to defend this dynamic support trend line and the key level structure of the 1.34536, this will signal the bullish rally right here is gradually turning into a bearish no rally. So next week, pay close attention to this currency pairs. And if you want to buy right here based on the retest right here, I would advise you exercise a small position size because the trade right there is still kind of too risky. The next currency on our watch list is the euro paired against the USD. I discussed about the significance of this bullish rally on this currency pairs last week. As well, I pointed out the significance of the right shoulder of this head and shoulder pattern right there. I said for as long price trade below this right shoulder right here of this pattern, then the rally right here is still under the influence of the bears. And then not until we can figure if the bulls can ensure a strong daily close above the right shoulder of this pattern. You can see the analysis worked as forecasted last week. So for as long the bears are still pulling price below this right shoulder right there, it suggests the rally right there has a high tendency to transform into a bearish pullback. And then if you should view this currency pairs again properly, you're going to figure out there is a kind of formation which we can tag as an inverse head and shoulder forming on this currency pairs as well. And we can tag the structure right there as the neckline of the formation right there. So what we got right there is a kind of conflicting signal. So in a kind of market whereby there's a conflicting signal, then it's advisable you stay off such currency pairs. So next week, I'm going to patiently wait to see what the bulls and the bears have to get done at this dynamic trend line right here. Likewise, the neckline of this pattern right there, as well the key level support of the 1.19653. To summarize the analysis right here, if the bulls can ensure a strong bullish close of back above this dynamic structure next week, then it suggests the bulls are gradually jarring up to build more momentum to break above this right shoulder of this pattern. And if that should occur, then it means the bulls are willing to retest the previous key levels resistance, which acts at the price level of the 1.23563. Alternatively, next week, if the bear should put price downward and then clear off the neckline of the pattern we got right there, then it suggests the bears are willing to retest the previous key level support, which acts at the price level of the 1.9653. And if the bulls should fail to defend this key level support, then it suggests the currency pairs, the euro paired against the USD, is gradually transforming into a bearish rally. So next week, as a price action trader, focus your attention to the neckline of this inverse head and shoulder right here. Likewise, the dynamic support trend line right here, and the neckline support of the 1.20594. Likewise, the key level support of 1.19653. The next currency pairs on our watch list is the Australian dollar paired against the USD. If you missed the bullish setup analysis which I gave on this currency pairs last week, it's not yet too late. But if you want to buy this currency pairs, this is how you should approach the market. So next week, as a price action trader, if you already have a position executed right here, which I shared with the VIP members community of mine, then that's good. And if you haven't executed a position right here on this currency pairs, then next week we can see price made a strong bullish close above the last high right here. If price can offer a pullback to this level with a strong bullish price action bar, then it still suggests the bulls are willing to build up more bullish momentum to continue this rally right here. And then I would suggest the best zone to have a stop loss should be at this structure right there. So make sure you implement a healthy risk reward ratio system. Alternatively, next week, if the bears should put price to this level right there and the bulls fail to defend this key level structure of the 0.78181, whereby it failed to serve as a new support structure, then there's high tendency the bears are going to be willing to put price downward, and this could actually lead to retest of this bullish flag trend line right here. And if that should occur, whereby the bears retest this structure right here, it's a signal that the flag we got right there is gradually turning into a weak pattern. Technically, price should not retest this structure once again. And if the bulls fail to defend this dynamic trend line right here, then the key level support of the 0.76373 lies another fate for the bulls. And if that should occur, whereby the bulls fail to defend this key level structure, then it suggests this pattern right there has been invalidated. So next week, as a price action trader, focus your attention to this currency pairs right there at the key level of the 0.78181. Likewise, the swing low we got right here, and then the dynamic trend line of this bullish flag. The next currency pairs on our watch list is the British pound sterling paired against the Japanese yen. We all can see the British pound sterling had been on a bullish wave count. You can see the pattern, and the right here we got an aggressive bullish rally. But right now, price is retesting a major key level resistance, which acts at the price level of the 147.968. This key level structure resistance right there is a multi-year key level structure, which we got to pay close attention to. So let's check this key level structure based on the weekly chart frame. So here comes the weekly chart frame of the British pound sterling paired against the Japanese yen. We can see what we got right here. We can see the formation we got right there is a kind of a double bottom. So we can tag this structure right here as the first bottom, the second bottom, and the pattern key level structure we got right there as the neckline of this pattern. Technically, I know you don't want to buy this resistance structure of this double bottom right here. Of course, we longed this currency pairs last week. We bought this currency pairs, and then I shared this setup with the VIP members community of FXLess. I have an image of how I shared this analysis with the VIP last week, and then here comes the image right here. So this is how we found this trade setup right from this structure of this level right here based on the 4-hour chart frame. You can see right here how I said you got to buy this currency pair. Also, I and the entire VIP members last week, we short almost yen currency pairs, and I am still trailing some of my profit in the trade which I have as a swing trading. For example, I am on Australian paired against the Japanese yen, and then the Canadian dollar paired against the Japanese yen as well. I am still trailing my profit on the Australian dollar paired against the USD. But I advise traders in my VIP members community to close their trade on the British pound sterling paired against the Japanese yen based on this multi-year resistance key level structure. So next week, I think it's suitable to look out for a pullback of price before anticipating for a bullish rally on this currency pair. You can see as well the rising strong bullish channel we got right there. Price is currently retesting the dynamic resistance trend line in conjunction with the major key level resistance of the price level of the 147.968, which is a multi-year key level resistance. We can see how it had been acting as a resistance for price right from 2019. We can see that. So let's check back based on the daily chart frame. We are back to the daily chart frame of the British pound sterling paired against the Japanese yen. For as long the higher time frame is giving us a signal it's very risky to buy, then I think we have to obey the higher time frame. The higher time frame controls the lower time frame, which means the weekly time frame is much more superior than the daily chart frame. So what we got to do right here is, technically we can see as well price is at a key level resistance, and then as well as the resistance of this bullish rising channel right there, the dynamic resistance trend line. So next week, I think it's better to look out if price can offer a pullback downward or a bearish price action signal. In fact, there is high tendency for the bears to step in next week to short this currency pairs, and then the next key levels support acts at the price level of the 144.633, and then the bulls have to do what they can to defend this key level structure. Failure for the bulls to defend this key level structure next week, then it suggests the bears are willing to put price downward, and before that can occur on this currency pairs, it means there must be high volatility, high volume to put price to this structure right there. So next week, if you want to buy the British pound sterling pair against the Japanese yen, I think it's very, very risky decision. So make sure you understand what you want to do right there. In fact, I'm going to be looking out for a pullback to this key level structure of the 144.633 next week. It's time we wrap up analysis with the euro pair against the switch. If you have been following my analysis for a while right now, you would notice I haven't been discussing about the minor currency pairs for a while right now. The reason I haven't been focusing my attention on these currency pairs is due to most of these currency pairs are in a kind of choppy market. But the market which I can figure out right now to have a possibility of a trade setup is the euro pair against the switch. We can see the pattern we got right here is a pattern which is an ascending triangle, which known as a technical bullish breakout. So next week, as a price action trader, we need to focus our attention to the price level of the 1.0862 to see how price gonna react at this level. And then don't forget, this key level structure had been a strong resistance structure for price. You can see when price retests this level, there's always a pullback. And right here, we got this as a support for price. So it's a multi-year key level structure. The bulls have to break out before they can spit higher for the next major resistance, which acts at the price level of the 1.10343. Also, if we should view in, let's zoom in this currency pairs. You're going to figure out, the pattern we got right here. It's an inverse head and shoulder within the range right there, which as well we got the neckline right there. Thursday bar broke this neckline, which means there's high tendency for this pattern right here to lead into a bullish breakout. However, there's tendency for bears to step in, and then the bulls can as well step in right here to make this neckline of this pattern to become a dynamic support in order to build more momentum for the bulls to put price upward to break out of this key level resistance. Finally, that is at the price level of the 1.0868, and then that should occur. It means this level right there is turning into high low. Likewise, right there we got a high low, right here we got a high low, right here we got a high low. And this is why I'm suggesting the best way to trade this setup right there should be based on swing trading strategy. So next week, as a price action trader, I want you to focus your attention to this currency pairs and figure out how price gonna react to this level. If price can offer a breakout, look out for a strong retest with a strong bullish price action signal before you go long. And it's best suitable to have your stop loss right here. So let's quickly check on the weekly chart frame of this currency pairs. So here comes the weekly chart frame of the euro pair against the switch. We can see this currency pairs has been in a long time bearish rally right from this swing high right here in April of 2018. You can see that a long time bearish trend, and the price now is gradually changing into a bullish sentiment. You can see the swing lower low right here. We got a high low right here. We got a high low right here, and the right here we got a high low strings right here, bullish engulfing bar. So that's high tendency for the bulls to break out of this pattern next week for a more bullish upward rally. Alternatively, next week, if the bulls fail to break out of this key level structure of the 1.08682, then it suggests there's high possibility for this currency pairs to still transform within the range. So guys, this is all I have for you in this weekly Forex forecast. Thanks so much for watching this forecast from the beginning to the end. I really appreciate your time. And then if you are looking out for a reliable Forex trading brokerage firm, there's a link under this video for you. Check on the link so you can register on a honest, trustworthy, transparent Forex brokerage firm today. As well, if you are looking out for a reliable stock brokerage company, there's a link under this video as well. And then if you want to trade cryptocurrency on a reliable exchange platform, I got a link under this video as well. Do not forget to like, share, put a comment on this video, subscribe, and then click on the notification bell. So whenever I release additional content of this kind, you're gonna be the first to be notified. If you are interested in the FS VIP members community, this is a community whereby I share my personal trading decision with my members. There's a link under this video as well. Check on the link so you can become a member today. Thank you so much, and then looking forward to seeing you in the next weekly Forex forecast. Peace.